Welcome to ForexTV.com. Today's Monday, July 14th. I'm Remy Hokie for New York Forex Market Buzz. In afternoon trade, the U.S. dollar is off session lows against both the euro and yen. And taking a look at the latest headlines from the CEP news desk, it was a relatively quiet morning for economic news aside from the Fannie Mae and Freddie Mac development. The U.S. government announced it would increase the lines of credit for the failing bond insurers. Treasury Secretary Henry Paulson made the announcement, saying the two government-sponsored enterprises, or GSEs, will have the temporary ability to purchase equity and that the Fed would be available to make emergency loans. Although Paulson has worked closely with leaders from both parties, the plan remains subject to congressional approval. Nevertheless, the Fed did announce discount window lending to Fannie Mae and Freddie Mac if necessary. And speaking at the Federal Reserve open meeting on mortgage rules, Fed Chairman Ben Bernanke said the new rules will be aimed at protecting consumers from deceptive practices. Bernanke said that the new rules would apply to all mortgage lenders and delinquencies as delinquencies and foreclosures continue to grow rapidly. And taking a quick look at data releases, Canadian retail sales surged more than 6% in Q1 of 08 compared to the previous year. Spending on automotive fuels shot up 20.5% in the same period. And in overnight releases, the ONS reported that UK input producer prices rose by a record 30.3% on an annual basis in June. May's figure was revised up from a previous growth rate of 27.9%. And on a monthly basis, input producer price inflation slowed to 2.1% in June. And according to data released by Eurostat, Eurozone industrial production fell by a further 1.9% in May, month on month. May's fall is the strongest recorded since December of 1992. And this afternoon, I'm joined by Dustin Reid, Senior Currency Strategist at ABN Amro. Good afternoon, Dustin.
Good afternoon.
Happy Monday, and thanks for joining us.
You're very welcome.
Well, as we start off the week, we're seeing the U.S. dollar is off session lows against the euro and yen, but still at session lows against the Aussie dollar as well as the pound. So, Dustin, before we take a closer look at the major pairs as well as the crosses, the Freddie and Fannie Mortgage Finance Rescue Plan did lift overall sentiment, but jitters over the financial sector are still prominent. So, Dustin, in this data-heavy week ahead of earnings reports and also Bernanke's testimony on Tuesday and Thursday, what will you be paying attention to for direction in the FX market?
In general, there's clearly a lot of themes, a lot of things happening in markets to pay attention to. Overall, from a macro point of view, I'm definitely paying attention to risk aversion and just general appetite for risk, not only within FX but also across asset classes such as fixed income and equities. Equities sentiment in terms of risk has been a great indicator of late in terms of where the dollar has been going against the majors in FX. So I definitely will continue to pay attention to that. As Fannie and Freddie continue to affect sentiment, as well as some of the banking and brokerage stocks, as well as you were just mentioning, I would also be paying heavy attention to Bernanke's semi-annual, what used to be called the Humphrey Hawkins testimony, tomorrow at the Senate. I think that's going to be very, very key. He's obviously going to have a lot of questions in the Q&A session about what's happening with Fannie and Freddie, but also probably a lot of concerns about, should the Fed even be having a hawkish bias right now, given all the concerns over the U.S. financial markets. So, very key testimony, probably the most key in a while for Bernanke at the Senate tomorrow.
Okay, Dustin, now that we've started out with a broad overview, let's move on to euro dollar. The euro continues to edge closer to all-time highs, although the U.S. currency is off session lows. Now, fundamentally, Eurozone data is softening, while expectations for monetary tightening from the Fed Reserve have eased. But technically, in the short term, what's your forecast for euro dollar?
I would not be surprised to see euro dollar move above 160 and test the all-time highs above 160 in the coming weeks. You're absolutely correct. The Eurozone data has been falling off a little bit, but the sentiment in the U.S. has also been falling off. And I think the key driver for FX right now is less the macro day-to-day stuff and more overall risk sentiment. And if we continue on the current path that we're on, I suspect more weakness in the dollar broadly against not only the euro but also against most of the majors, and would expect euro dollar to test 160 and possibly breach the all-time highs that we hit a few months ago.
Okay, Dustin, now that we've covered euro dollar, I want to shift our focus over to the Aussie dollar. The currency has advanced to another multi-decade high of 97.35 and is currently hovering around that level. Now, the Aussie dollar pair looks bullish across all the charts, but for the Aussie dollar against both the yen as well as the U.S. currency, what is your short-term strategy?
My short-term strategy on Aussie yen, as it happens, I put out a trade recommendation last week. I'm hoping that Aussie yen trades lower on the back of, again, increased risk aversion, where typically the yen outperforms most of the G10 currencies along with Swiss. I would expect Aussie yen to head lower. The issue with that is that obviously commodity prices remain exceptionally high, not only energy prices, but also metals, soft commodities, lumber, agricultural products and such. And Australia has a very good correlation over the longer term, especially with the metals side of commodities. So obviously with metals and commodities doing well, Aussie's been very well bid against the dollar as well as against yen. So it's a bit of a tough trade, but if you have a little bit of risk appetite, I think short Aussie yen might be worth an interesting look at in the coming days and coming weeks.
Okay, Dustin, while we're still on the yen, let's shift our focus over to the yen against both the dollar as well as the euro. Now, in the broader market, we're seeing equities sell off and are currently at intraday lows. We're seeing dollar-yen lower on the session, but given your analysis, what's your short-term forecast for the yen against both the dollar as well as the euro?
Euro-yen's had a really good run in terms of moving higher over the past little while, and would expect to continue to see that, assuming we have continued broad dollar weakness within the G3. Again, if you believe that the world's going to become more risk averse over the next couple of weeks or months, the yen appears to be a good play for that time. Typically, the yen outperforms when the market is in a risk-averse trading environment. So I wouldn't be surprised to see dollar-yen move back down towards 104, maybe even 103.5 in the next month or so. And we continue to expect to see euro-yen trade higher and eclipse its recent all-time highs.
Okay, Dustin, now that we've covered the yen, euro, as well as Aussie, let's take a look at the UK currency. In New York afternoon trade, cable is back up at Friday's peak of 99.50 and is currently trading around 1.9960. Meanwhile, euro sterling managed to advance above the 80 level today, although the cross has come off since earlier highs. So what is your strategy for the UK currency?
Very difficult UK call with how sterling's traded over the past number of months. A lot of people on the street are looking for sterling in general to trade lower, especially cable, so sterling dollar. But that hasn't necessarily happened. The UK housing market is definitely in a shambles with the 4 or 5 regional housing price indices suggesting significant losses on a month-over-month basis, and now declines on an annual basis. But that really hasn't been able to dent cable significantly lower. Again, I think a lot of that has to do with weaker dollar versus a stronger sterling. I think it's probably been more of a dollar story than a sterling story. But the UK finds itself in a very similar situation as the US, and the central bank in the UK also finds itself in a very similar situation to the Fed, whereby they've got a deteriorating domestic economic picture, mostly due to the housing side, and then consumer sentiment's also falling. But they have increasing inflation pressures, and obviously UK, being the geographic island that it is, it imports a lot of its goods. So it's in a tough spot. The Bank of England's in a tough spot where, again, you've got rising prices but deteriorating domestic economic conditions. I still think sterling, dollar, or cable is a play above 200. I still think that's mostly on the back of a weaker dollar. I wouldn't be surprised to see it move back up to 2 and maybe even 202, the big figure.
Okay, last but not least, before we wrap it up, are there any other majors or crosses you're paying attention to in the upcoming sessions?
Yeah, I'm also watching Dollar Canada pretty closely. The Bank of Canada has a rate meeting tomorrow morning around 9 a.m. Eastern, where it's expected to keep rates unchanged, although they surprised the market last time at their last meeting in June by not making any change to rates and keeping rates on hold. Their statement was also very hawkish, so looking to see if they continue that hawkish bias in the within the current environment, which seems to be getting more risk averse. So it'll be interesting to see how dollar Canada moves after that announcement at 9 a.m. tomorrow morning.
Okay, Dustin, we're all out of time for today's interview. Thank you very much for your insight and analysis.
Thanks very much.
This has been your Forex Market Buzz with Dustin Reid, Senior Currency Strategist at ABN Amro. I'm Remy Hoki. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.